Checking out the XLV healthcare ETF on a weekly chart, specifically from 2018 forward, we see that there's a supportive curve from the April 18 low up into current, except for the breakdown from March 2020 into April 2020. And there's a resistance curve from October 18 forward in one breakout above price from December 2019 into February 2020. Except for those two exceptions, price has stayed within this curve the whole time. If we wanted, we can put a retracement level on the breakout level here. We see the 161.8 projecting at 124.57. We had weeks of price here under that level as resistance. We see a big break up and out. Price tests into the upside of the curve and then back into the lower end at the 161.8, 124.57 as support. And since then, we've seen a fairly significant bounce. We can throw one more retracement level on as short term, and we see that price projects out the 161.8 at 144.69 and then the 261.8 at 156.11 as upside targets. I think the interesting thing about this curve on the XLV is how pronounced it's starting to curve higher. If we put a vertical line at the 7th of November of next year, exactly 1 year away, we can watch where price crosses this line as for potential targets for price of the XLV into next year. And because of how pronounced the curve is, we see levels such as this one that price project out here 31% higher, and that's on the supportive end of the curve. Price would be around 177.37 at the 7 November 22. And we can even price out the longer side where price crosses up here into this level. And for a 1 year gain at oh 07 November 22 of next year, it looks for price to be somewhere near $263 or a 97% increase in price from year over year. So certainly something very significant that I think people may be missing. Obviously, yes, there is the option that this curve can break down, but the risk of the curve breaking down right now is roughly, let's call it $6, whereas upside potential is 96% of 132. So something certainly to keep an eye on here in the XLV as price maintains this supportive level. We could even go and put a 61.8 of the cycle on as a short-term support, and it reduces our risk all the way down to less than $1 at 132.21 as support. So we could assume last week's low as support and see if price moves up off of that. Again, target one is 144.69. Target two is into the 156, 157. And then we break into the 177, 209, and finally all the way up here into 262, where the major high, where I mean that's assuming that this breaks up and out of pattern and closes perfectly at um, the high of this resistance curve. So certainly an interesting chart to watch going into next year.